In this chapter, we're discussing about substitute goods. So in economics, a substitute good is a product or service that can be substituted by the consumer because the consumer doesn't really see a big difference between the two goods. Okay. In such case, if the price of one product increase, normally if price increase, demand will fall. But because there is a substitute good available, if the price of say a product A has increased, the demand will for the other substitute product B will increase. So let us take an example. Say if price of coffee suddenly increases, what will people do? People will shift from consuming coffee to tea because they see tea and coffee as substitute goods. Okay, similarly Pepsi and Coke, say they are substitute goods because if you see there is no major difference between the prices, even though they're two different companies, they're selling under different brand names. If you see Pepsi sells say 300 ml bottle for 12 rupees, Coke will also sell it at around that the same price. What happens if Coke sells at a higher 15 rupees, that same 300 ml? Then people will be consuming to prefer Pepsi to Coke because they perceive them to be the same. They are substitute goods. It doesn't really matter to them which product they consume. Okay. Similarly, banks take deposits from public and give them interest. However, there are many other avenues for investing your money which give good returns, like post office savings, share market, mutual funds. So these are substitutes for bank deposits. So of course the risk level is different. So this is not exactly a correct example, but ignoring the risk factor for the moment, all these are substitute goods. The importance of substitute good is if there is a substitute good available, the price, if you increase the price of one product, that will result in the increase in demand for the substitute good. Okay. So in banking industry, because you're entering into banking industry, you should understand what are the substitute goods for bank deposits. Is bank deposit the only option for people to invest their money? No, there are other options also. There are post office savings, share market, mutual funds. All of these are investment options for people to save their money, and they also give returns. Just like banks, you say 7 or 8% of the fixed deposit. These other options are also giving interest rates. The risk level may be comparatively higher. Okay, but still they are substitute products. So in interviews, they may ask you what is substitute good, give an example of substitute goods, and they may ask you banks take deposits from public and give them interest. So what are some substitutes for this?